have Jeremy Lipsy with me from Lawyers Title, and we're going to talk a little bit about title insurance and title policies. And Jeremy, my first question for you is, what does title do when a property goes into escrow?
Thanks, Cece. I appreciate it. I think that it's a very good question, and one that unbelievably is seldom asked by agents and even less by consumers, only because it's such a abstract part of a real estate transaction. So to answer your question, what happens is when you go into escrow, when a buyer and seller come together and come to an agreement on the price and whatnot, then escrow is opened, and the escrow company, based on what the agents have agreed on, open what's called a preliminary title report.
Okay.
What happens then is the property that's in escrow, the property being bought and sold, is a deep search is done on it. I like to think of it kind of as when you're buying a brand new vehicle. If you've seen those commercials with the fox jumping around, the Carfax, get the Carfax, get the Carfax. Well, what a title report is kind of like the facts on a property.
Okay, so like a house fax.
Absolutely, house
Okay.
fax.
Okay.
It's a very deep search into many different parts of the property. Mainly what we're trying to identify for the escrow is all of the, first and foremost, who owns the property? Do we have the correct seller? Is the correct seller on the documentation?
Very
That's
important.
the very first thing. The second thing is, have we identified the correct property? Because we certainly don't want to do a search on the wrong property and get everyone mixed up. But certainly once we've identified that we have the correct property, correct owner, everything's in order there, we go into a lien search on the property, which in layman's terms is what's owed on the property. Okay, is there a mortgage, a first and a second? Which is very important. You want to know those first and second, maybe even third positions for the mortgages, because those need to be paid off before we can convey title to the new buyer.
Sure.
Other types of liens are spousal liens. Unfortunately, we have a lot of tax liens. Folks haven't paid their taxes.
Yeah, and sellers can't always, or aren't always upfront with the buyers sometimes. So this is why a title report is so important, because it gives it to you in black and white. So now, one of the things that happens when you write a contract, you know, you come to the closing costs and you see this part that says who's going to pay for the title insurance. What is title insurance, and why do people need title insurance?
So title insurance in a nutshell is simply this. Us as a title company, Lawyers Title, telling you, the seller and the buyer on the transaction, listen, we're going to search this property. We're going to issue a report that gives you everything about the property, the liens, the easements. If you have a buyer, for instance, that's looking to put in a swimming pool,
Sure.
they don't want an easement, which is a legal right for others.
Right away.
Exactly. So things like that are very important, but the reason why they're paying for it is this, is that you want a clean bill of health, per se, when you take, if you're the buyer, when you take title to a property.
Right.
We want to make sure from a title perspective that all of those liens are taken care of. The first and second, if there is one, is paid off. Tax liens from the seller, paid off in some way, shape, or form.
Right.
So that when we convey the property through the close of escrow, a clean bill of health is given. To answer your question, the payment received from the seller and the buyer on title is to hire engineers, staff, to do those deep searches and make sure that nothing is missed on that property. For anyone whoever has had a title issue, it can be very, very technical and difficult to reverse. So if we catch it on the front end, it makes for happy buyers and sellers.
Yes, and definitely a good insurance to have. And then the last question I have, especially on the contract, when you're buying a property, you're going to see that there is a lender's policy, title policy, and also a seller's policy or a owner's policy. Why the separation there?
Oh, great question. I know that this is even more encrypted in our industry than even what is title insurance.
Sure.
What happens on a sale transaction? So when there's a buyer and seller, you have two policies. There's an owner's policy, which is passed on to the new owner. So, you know, it kind of makes sense. The new owner gets this policy. It's kind of like a casualty insurance policy. It ensures that certain things don't happen to your property, or if they do, the title insurance covers you. So that's passed on to the new owner. Things against encroachment, so you find that your neighbor or you are encroached on each other's properties, the title company would have to come out and create some type of remedy for you, or there would at least be a claim. Other things which are very prevalent in California, unfortunately, is fraud, document fraud. And so the title company would cover you there, and many other coverages. There are numerous coverages, but it's great to have. The lender's policy, which is a second policy, typically, and of course it varies on every transaction, but typically the buyer pays for this policy.
Yes, and I've experienced that.
What it ensures is that the new lender coming in, so say that you have a lender that's being paid off, and the B lender is coming in for the new owner. That's their mortgage broker, their mortgage company, their lender per se. We're ensuring to that entity that they're in first position. The reason, and so by putting them in first position, we have to pay off all the old liens. So we're ensuring to them they're in first position. The reason why that's so vital and important, you'll see in this market today, foreclosures. If you're not in first position, you're not the first one to get money. So if God forbid, if the property were to go to foreclosure, that lender would not be paid off first if they're not in first position. Any other lien in front of them would be paid first, then them. So they want that guarantee, which is a lender's policy. So it's a guarantee from us, the title company, that the new lender is in first position. Huge for the lender, especially in a foreclosure market that unfortunately we've just gone through and still experiencing to some degree. And to answer another question that sometimes comes out of the lender's policy, if there's no lender, the buyer doesn't have to buy or pay for a lender's policy. So there's no title costs per se as far as a policy goes on a purchase if it's a cash deal.
That's always nice.
So buy cash if you can.
Definitely buy cash if you can, but for most first-time home buyers, they're definitely probably going to get a loan. And it's really important to know what you're going to pay above and beyond the purchase price. And closing costs are always, people always have questions on those and why they're paying for them. So I hope this was able to answer some of those questions. And thank you, Jeremy, for coming in with me and taking this video, and I hope you enjoyed it.
Thank you, Cece.
All right.